Hi everyone, this is Will, aka Dr. Financial Literacy. Hope you're having a wonderful today. We will start by looking at just a recap of first the credit cards that I started the month with, two, and looking at credit card situation and how it has improved or not improved over the last 3 months. Uh, Three, going on into the future and seeing how velocity banking can work or will not work, and four, giving you some sort of idea of some of the lessons that I've learned in general with velocity banking. Okay, and starting, we want to look at the first month that I started looking at velocity banking, and that started in January. I started in December again because I was looking for a home equity line of credit that will reduce the amount that I was spending on carrying three mortgages. So from there, I was unable to secure that home line of equity because of the business expenses that I was carrying and also the personal debt. So I fell back to looking at, okay, maybe I can get a personal line of credit because I saw where some individuals were able to bring down their debt by using a personal line of credit, maybe consolidating their debt or throwing chunks of money at their debt, and it was open. I was unable to be successful with that. So lastly, I just looked at, okay, what can I do? Well, it was recommended that I close some of my accounts or reduce some of my credit card debts in general. I started looking around in general to try to think of, okay, how can it be done? What's the best method? Because I have been historically just paying the minimum and then just above the minimum. And it was getting the job done and paying down the debt, but maybe not as rapidly as I needed to. So then I started looking at, I found velocity banking, accelerated banking, and these are types of strategies where you're using a line of credit to reduce debt. As I stated earlier, I was unable to successfully secure a personal line of credit or a HELOC. So I turned to the credit cards that I have and using them in a quasi manner um, in terms of a line of credit, but not as a PLOC and not as a HELOC. So um, I started the month off with a total of 11 credit cards. Those 11 credit cards total a monthly payment of about $637. Now, I utilize, as I mentioned earlier, Navy Federal in terms of taking a cash advance from Navy Federal, throwing it on some of the cards, and paying some of the cards out. So where you see a zero, it was either I started without any balance or I used the Navy Federal cash advance to pay it off. So starting with card one, that was 230, card two, 206, 44, 40, 40, 35, 35, and so on. And that gave me a total of 637. Next month in February, because I made a payment, I chunked on my salaries of about say 1,600. My wages in California has gone up about 1%, but on average, I'm making probably 16,500 every 2 weeks, or about $3,000 a month. 37% of my wages is going toward housing in general. So I'm above the 30% that they talk about in terms of how much you should be paying rent. So in February, it started coming down, making the payments in general. And in some of the months, it's going to go up because I used the card to make a purchase, and some of it will be lower. I'm trying to use the cards just to keep them active in general, and also to show lenders that I can responsibly continue to use the cards as they come down. So there's 218, 49, 52, 35, and so forth. Did come down approximately $40, and I may have came from paying off card 7 and card 4 in general, but I picked up $40. Now moving on to March, and I started paying the bills. I selected one of the cards to make sure that I do all my purchases on and do all my bills. In previous videos, I indicated that I am paying my mortgages and I am paying my rent through my checking account, not a third party entity, and I'm using what's called a overdraft protection in various forms. But I am paying them through credit cards, and I'm not using a third party with those additional fees. So, if you're going to use that method, please read all the disclosures that comes with your card, because it comes with some come with fees and some have not. So in March, the bill is starting to drop. Again, I have chunked my entire check on one of the credit cards. It came down immediately, paid down some interest, paid down some of the other credit cards, and freed up some cash flow. What I'm trying to go back now and also is to look at some of the advocates indicating that when you make a payment, then you're satisfying the card and it increases your cash flow. I'm still going back and working that out and see how that is occurring. I suspect that it is occurring within the cards. It's not dropping as large as I thought it would be, and that may be a matter of just my math and the strategy that I'm using as I continue to learn velocity banking. So in March, the bills are starting, monthly payments are starting to come down, 102, 173, 20, 31. This one is staying the same, it's pretty much the highest at like 32.9% interest. 35, 0, 0, 28. This 28 is back on the Walmart card. I took a cash advance at Walmart. They don't call it a cash advance. It's more of a cash purchase. So if you go to Walmart, based on the amount of credit that you have, you can get cash back based on a purchase. My Carolina credit was $1,000, so I was able to get $300 cash advance by spending $1.25 for 3 purchases each. And then I took that money, placed it into rotation, but I need to pay Walmart off before the end of this month to not incur any expenses. But it was no fees for a cash, shouldn't call it a cash advance because Walmart don't necessarily call it that, but you can possibly look at it that way. All right, continuing along in April. So in April, I expect to have this one card paid off by chunking my entire paycheck on it. That should pay that card off. And then I'm going to start paying the bills through it. But I should be ending with that balance in April with a 0. The second card will continue at $144. This third card, this was a Discover card, so I expect it to be 0. This 20 was not any charges that I made, but it was interest that was left over from the about 14, 13 that I paid off. So that was just interest. So that card right now is at a 0 balance. This card next, $70, and that has increased. That is the Navy Federal card. I maxed out the Navy Federal card. I withdrew the cash off of the card. That was about $6,200. Put it on a prepaid card, and I've been taking chunks of $600 a month off of the to-go prepaid card for Navy Federal, and that is at 18% interest. So I called and got the Navy Federal prepaid card and put about 4,000 on it because I also had a cash advance on it. But I have maxed out this Navy Federal card number 4, and that's going to be about $70.40 a month that I'm paying back. And I did that because these other two cars and some of the other cars were at about 25% to 32%. The Navy Federal was 18%, so that saves about 6%. So I am saving some more cash flow by making this one payment in general. Now I've increased my utilization or debt to income ratio, but it has also gone down. So the credit profile has kind of like fluctuated. Continue to 52 on this particular card unless I have some additional cash flow and that can help. These three cards right here, they should go down to 0. I should be finished with, as I said, a Walmart cash advance, and that's total is 303, and I'm paying about $28 a month. So all in all, 266 is what I'm projecting in general. And all of this means and talks about financial capability. There is financial literacy and understanding what you're doing in terms of resources, but financial capability is a concept that moves you to a different level in terms of understanding what I call your behavior, attitude, skills, knowledge, and data around money. The data being just the facts and figures and the numbers of how you're using your money and how I'm using my money. So from the beginning, to sum it up, I started off the month of January with about $637 a month in credit card payments. I'm ending the month or starting April, I should have only $266 a month to pay. And that should come from increasing cash flow that's coming from paying off cards in general, and not as much as I expected, or again, as I look into the numbers and try to better understand velocity banking. Again, the great thing about, or what I like about velocity banking, is that it's going from my employer to the bank onto the credit card and immediately hitting that credit card, making that payment, and freeing up some cash flow in general. So I really like this system. I think it's been very successful in me paying off at least 1, 2, 3, and 4 credit cards since the beginning of using velocity banking, cash advance, in general. So just a number of different tools that I'm mixing in here. I think my credit in terms of how much I owe have gone from maybe 22,000 to 18,000. So I've been able to shave off up in this area at least I think about $3,000 to $4,000 in general. So I'm still looking at the numbers, still adding them up, but definitely enjoy what's going on, and the spending that I have had and getting it under control. So it is what it is, but it will become what you make of it. Thank you very much for stopping by. Everyone have a great day, and let you have a chance to look at the chart one more time. And yeah, thank you very much for stopping by. You have a great day. If you have any questions, please just drop me a line. Anything that can help me improve the presentation and the questions will be great. Everyone have a great day.